All right, welcome to The Explainer. Today we're diving into a company that stared down one of the biggest crises in travel history and didn't just walk away, it came out stronger. We're talking about the Indian Hotels Company, or IHCL. We're going to unpack the strategy and the sheer grit that turned this hospitality giant into, really, a masterclass in resilience. So let's get right into it. To really get the IHCL story, you have to go back to this moment. The pandemic wasn't just a slow quarter. It was a complete lights-out crisis for the entire hotel industry. Rooms were empty, borders were sealed shut, and honestly, the future looked terrifyingly uncertain. It was the ultimate stress test for absolutely everyone. But right in the middle of all that chaos, something pretty incredible started to happen. While most of the industry was just trying to keep its head above water, IHCL, the company behind the legendary Taj Hotels, was somehow posting record numbers. So, the billion-dollar question is, how? How in the world did they manage to turn a global crisis into a launching pad for growth like this? To figure that out, we first need to zoom out and look at the whole picture. Because the entire Indian hotel sector didn't just bounce back, it was fundamentally rewired, rewriting its whole playbook for a totally new world.
Just look at the speed of this comeback. The average daily rate, or ADR, which is basically what people are paying per night, it completely fell off a cliff in fiscal 21. But then, look at that V-shape. It didn't just recover, it rocketed to an all-time high by 24. This tells you it wasn't just about filling rooms again, it was about powerful demand allowing them to charge more than ever before.
And that massive rebound was fueled by two huge shifts. First, the entire focus flipped. The old game of relying on foreign tourists? Gone. It was replaced by a pivot to a huge, booming domestic travel market. And second, the race to digital went into overdrive. Things like contactless service went from a nice little perk to an absolute necessity, almost overnight.
So that's the new playing field. Now let's zoom back in on IHCL's story. Because they didn't just follow these trends, they pretty much led the charge. The numbers behind the comeback of this crown jewel are, frankly, amazing.
13. Now that's not just some random number. That's a streak. We're talking 13 consecutive quarters of record-breaking performance. Think about that. Coming out of the worst crisis the industry has ever seen, a run like that is more than just successful. It's practically unheard of.
And that streak looks like this in black and white. Just look at these Q1 numbers. Revenue soaring past 2,100 crore rupees. That's a 32% jump. Operating profit, or EBITDA, climbed 29%, and their net profit was up 19% from the year before. See, this isn't a story about recovery anymore. This is a story about powerful, aggressive growth.
A massive part of this comes down to something you can't always put on a spreadsheet, the sheer power of the brand. The CEO, Puneet Chhatwal, calls Taj the crown jewel, and he's not just being poetic. For the fourth time, an independent group rated Taj the strongest hotel brand in the world. That's the kind of brand power that gives you a massive, massive edge.
Okay, so the results are incredible. We get it. But how? Let's pop the hood and take a look at the actual engine driving all this performance. What is their secret sauce? Well, their strategy is really a brilliant three-part machine where all the pieces work together. First, they're using an asset-light model to expand super fast. Second, they're diversifying their brandscape, so it's not just about luxury anymore. And third, they're plugging into the Tata digital universe to build an enormous loyalty army. So, this asset-light model is probably the most important piece to understand their growth. Instead of buying and building every single hotel, which costs a fortune, they're focusing more on management contracts. Basically, running hotels for other owners. This lets them grow their footprint like crazy and earn these really high-margin fees, which jumped 17% last quarter, by the way, without sinking billions into real estate. It's smart. And this chart just blows up that old idea of IHCL being only a luxury hotel company. Yeah, domestic hotels are still the biggest slice of the pie, but the other pieces tell the real story of where they're headed. You can see the management fees we just talked about, but look at that new businesses slice. It's growing at 27%, and it represents a huge part of their future. We're talking brands like the redesigned Ginger Hotels and their Cumin restaurant chain. And then you have the digital superpower. By plugging into the Tatanu app, IHCL's loyalty program just exploded. It went from about 2.2 million members to over 11 million. So why does that matter so much? Because that loyalty revenue is high margin, it's sticky, and it gives them a direct connection to a huge base of customers that their competitors simply can't touch. It's a massive advantage.
But of course, no story like this is a straight line up. To get the full picture, you have to look at the challenges they've been facing, because this is where you really see how resilient they are.
And they really faced a cocktail of challenges. You had geopolitical issues causing flight cancellations, you had major renovations at some of their biggest hotels, like the Taj Palace in Delhi, which took hundreds of rooms completely off the market. And of course, competition is always getting tougher. And yet, despite all that, their profit margins held strong. That tells you just how well this machine is running.
You know, this right here shows one of their biggest strengths. They're proactive. Take the massive shortage of skilled workers, a huge threat to the whole industry. Instead of just fighting for the same small pool of talent, IHCL's solution is the Pathaya Initiative. They've committed to training over 100,000 young people by 2030. They're not just solving their own problem. They're literally building the future workforce for the entire sector.
So you've got this company with a powerhouse brand, a super smart strategy, and it's proven it can take a punch. Which brings us to the big final question. What does all of this mean for its value and its future?
Well, when you look at what makes this company so valuable, it really boils down to these 4 key pillars. You've got that consistent, double-digit growth. You have really healthy profit margins holding steady around 30%. You have an incredibly strong balance sheet. They're actually net debt positive, which means they have more cash than debt, over 3,000 crore rupees worth. And on top of all that, a clear, ambitious plan to nearly double their number of hotels by 2030. That mix of performance today and a clear vision for tomorrow is exactly what gets investors excited.
And that leaves us with this one big thought to chew on. We've seen a company that not only crushed the post-pandemic recovery, but has built this incredible engine for growth. So with a strategy that's clearly working, new markets opening up, and an entire nation that's traveling more than ever, you just have to wonder, are we actually witnessing the very beginning of a new golden era for Indian hotels?